A tax mistake is an unintentional error. It's a slip-up. Maybe you transposed a couple of numbers, forgot to include a 1,099 from a small gig, or messed up a deduction because the rules were genuinely confusing. The key is you weren't trying to deceive anyone. Now, if you were careless in a way the IRS thinks you should have known better, that's technically called negligence. The single most important word that separates a mistake from fraud is intent. Tax fraud is the intentional or willful deception of the IRS to pay less tax than you legally owe. This isn't an oops, this is knowing the law and deliberately choosing to break it. Tax fraud is a big umbrella term for all the ways people cheat on their taxes. Examples include knowingly claiming deductions you're not entitled to, inventing dependents, or deliberately hiding income. Tax evasion isn't just a catch-all phrase, it's a specific felony under U.S. law, 26 U.S. Code 7201. All tax evasion is a form of tax fraud, but for the government to get a criminal conviction, they have to prove three specific things beyond a reasonable doubt. 1. There was an additional tax due and owing. 2. You acted willfully to get out of paying it. 3. You took an affirmative act to mislead the government or conceal the tax. That affirmative act is critical. Just failing to file a tax return by itself is usually a misdemeanor, not a felony. While there's a limited privilege for non-criminal matters with CPAs and other tax preparers, that privilege does not apply in a criminal investigation. Communications with a tax attorney, on the other hand, are protected by attorney-client privilege, which is a much stronger shield. Call us at 855-900-1040 for a confidential criminal tax consultation.